We're early on in this year. I know we've already sort of penciled in.
Okay, day traders. And now I want to talk about the art of day trading. As you can see, I pointed out the positions we hold for British pound. We have two long positions at 137.639 and 138.272, and one short position. I'm placing an order to sell all three positions at the price 137.96. All these three positions I want to sell at this price. Okay? So what's going to happen? I'm going to end up even at these two positions long, because these two positions will end up at zero, and I will make profit on short position. All this information you can find from our strategy, and we'll explain everything how it works. And if you want to trade like this, you need to get the strategy. Okay? So stay safe. I'll speak to you later, and let's see. As soon as it will reach this level, I will calculate the profit. If you're already into these positions, broker will send you straight away your profit on these three positions. Okay? Stay safe, and I'll speak to you later, guys.
A strategy refresh from Citigroup and the new CEO, Jane Fraser, to exit retail banking in 13 markets across Asia and Europe. And there's a beat to talk about in the numbers themselves, Tom, but I know that headline caught your eye.
Well, so by August 18th, we were back in record high territory, which was the third.
Okay, guys, as you can see, position closed on British pound. All three positions were closed. I will show you how much profit and loss we gained from trading British pound. At the end of the day, we received already confirmation from our broker that we have profit 2,800 pounds. Okay, so all of you guys who follow trades, it's worth it. We hold it for about a week, as far as I remember, and well done. For all newbies, new traders who never traded before, you probably right now discovered the secret how to day trade. Good for you guys. The other guys who already using our strategy and knows how to trade with our strategy, great. Let's move on. Let's not concentrate on one winning. Let's get lots of winnings for today. Okay, I'll speak to you later next time when I will see some new chance, new opportunity to that will arrive to trade. Okay, stay safe. Well done. Good trade, guys.
terms of 4.5 billion in fixed income makes it right behind JP Morgan.
Is there a tone?
Number 2.
Is there a different tone in the presentation than we saw from Mr. Corbett and his team?
There is. There's a tone of somebody who wants to show that she's coming in swinging. And so she's, the first out of the gate, 13 markets gone. She says we don't have the scale we need to compete.
Let's go to Gerard Cassidy with decades of expert. He always comes in swinging into the lobster restaurants of Portland, Maine. He's with RBC Capital Markets. Gerard Cassidy, I want to go to cost and geographic reduction as expense control. When you give up on retail in Vietnam and in Bahrain, is that nothing more than a closeted cost reduction?
Tom, I think it is. And when you take a look at the markets that they're exiting, the numbers that they have provided really do not have a material impact to the bottom line. Now, you might recall some years back they exited a handful of these consumer markets, and they obviously didn't go all the way. And Jane Fraser, with her first strategic move, is trying to make the company more profitable by exiting these markets where they really don't earn very much money.
Gerard, what's left? What's more to do?
It's going to be interesting because this has been the one area that a focus for many investors that they needed to really trim down their global footprint on the consumer side. They just didn't have the scale in certain markets. So then the next question is, how do you build up scale?
Citigroup's incredible equity trading numbers following on the SPAC-a-palooza, or whatever you want to call it. How long can these trends last to continue supporting their earnings?
It's going to be more challenging as we get into this year unless we get continued volatility and strength in the markets, and that's hard to predict. But we should understand that the SPAC ECM business, that has started to obviously slow down because a number of the investors in SPACs, they've already allocated the money for that. There's not as much money to go into SPACs. So now we need to see the de-SPACing. That's when they actually do the mergers. So that's going to be a lift to advisory businesses as we get into the second half of this year.
Gerard Cassidy, we talked to Michelle O'Neill from KW earlier. We reminisced on Bank of New England, long ago and far away, the ultimate roll-ups that you were directly involved in. Do you presume another season of roll-ups because of the technological superiority of these winners?
Tom, I think you're right. We are going to see more consolidation. It's already starting to pick up. As you might recall, Tom, when you and I were young men, we had 18,000 banks in the early 1980s. Today we're down at 5,100. We expect continued roll-up and consolidation to continue over the next 2 to 3 years. And it will be small community banks like Provident acquiring SB1 last year out of New Jersey, but also the big deals like we saw with M&T acquiring People's Bank of Connecticut. So we're going to see big regional deals, we believe, over the next 2 to 3 years, and the Canadians will likely get stronger in the U.S. as Crown Dominion has indicated they want to get bigger in the U.S.
Gerard, you're so gracious with your time on Morning